welcome from myself on behalf of CCAF and AfricaNenda. Delighted to welcome you all to this event. My name is Philip Rowan. I'm co-head of the Regulatory Innovation Hub at CCAF, where the Regulator Knowledge Exchange is Team R based. We lead research, digital tool development, and capacity building programs with financial authorities on the regulation of digital financial services. Myself, in terms of prior to joining the centre, I was also I was a regulator. I worked at the Financial Conduct Authority in London for many years, including in their innovation hub, where I led their international engagement, sharing best practice with regulators around the world. So you could say knowledge sharing is a long-standing passion of mine. Makes me very happy to see so many of you and important organisations and individuals in this space represented here this afternoon. Events like these are so important for making new connections and strengthening existing ones, and for sharing our collective experiences and insights with others so that we can all more effectively achieve our objectives. So yes, please do make use of the chat. In terms of other quick housekeeping and our agenda for today, we will have a brief kickoff on the Regulator Knowledge Exchange and how it works. And then we will move into our unveiling of the AfricaNenda Knowledge Zone itself, which we're very excited about. And then we will have our panel discussion and Q&A led by AfricaNenda themselves, which I'm really looking forward to hearing what they have to share. So before we begin, this event is part of the Regulator Knowledge Exchange series of events. The RKE, hosted by CCAF, is a peer-led and community-driven digital platform for financial sector authorities, policymakers and others in the international development space, public sector organizations, to enable, as the name suggests, effective peer learning and knowledge exchange. And the RKE brings people together digitally to connect, to learn, to coordinate, and to collaborate. The platform offers, as you can see on screen, a variety of features and functions. And these are all designed to enable and drive that knowledge exchange and coordination among the international regulatory, supervisory, policy-making community. The RKE itself officially launched in December 2022 and has to date grown significantly, which we're obviously very pleased about. And thank you for those of you who are joining from the RKE community today for making it such a success. We've connected nearly 2,500 members from more than 300 organizations from over 130 countries. Okay. 75% of members are from low-income and middle-income countries with particularly strong representation, very pleased to say, from Africa, Sub-Saharan Africa, certainly North Africa as well, but also other regions. More than 45% of the RKE members are women, and we see that many of the most active users are women, which is fantastic. And indeed, in our most recent survey, 77% of women responded that they felt the RKE has empowered them in their role as fintech regulators, which is fantastic. So that's just a little bit about the RKE. We are very excited today to share that as part of the RKE development, we are launching a new knowledge zone powered by AfricaNenda, which will come up on screen in just a second. Here we go. So knowledge zones are spaces which provide a quick and easy way for RKE members to access curated knowledge and insights from some of the most thought-leading and pioneering organizations in the space. And you might have seen a few of them on the scroll past there at the moment. Financial authorities and others in the policymaking community. And we're really excited and grateful to be adding AfricaNenda as an RKE knowledge partner to share their expertise, their knowledge, and their insights with the RKE community. And we'll be getting a taste of that in the panel session a little bit later. The RK itself, I should mention, it's completely free to join. All we ask is that you're a financial authority or a public sector organization in the international development community. Thanks, Linda. Yeah, Linda's just scroll back to the homepage and you can see some of the different sections, the features and the functions of that. We will post a link to the RKE for those of you who aren't a member and would like to join. We'll put that in the chat. You're very, very welcome to do so. So the AfricaNenda Knowledge Zone has a curated collection of publications, videos, interactive tools designed to enhance users' knowledge and skills. And really, this is highly relevant to regulators and policymakers all over the world, not particularly in Africa, but not just in Africa, who are looking to increase their knowledge and their understanding of how policies and regulations can help create that enabling environment for the development of inclusive instant payment systems to accelerate financial inclusion and cross-border payments. So we've just put a little teaser quite deliberately on screen today. You can see the different sections in the Knowledge Zone. We will also post a link in the chat to the Knowledge Zone specifically, and you can please do benefit from that and enjoy all the content and the resources at your disposal. So on that, I would like to welcome our next speaker, Jacqueline Jumah, who is Director of Advocacy and Capacity Development at AfricaNenda. She will present the latest findings from AfricaNenda's flagship report, SIPS, with a special focus on risk proportionate Fintech licensing and passporting. Over to you, Jacqueline. The honor and the pleasure is all ours. Thank you.
Thank you, Philip. Hello, everybody. I'll go straight to the presentation on enabling regulations, exploring risk proportionate Fintech licensing and passporting. Over to the next slide, please. I'll start off by introducing the AfricaNenda Foundation. Go to the next slide. The AfricaNenda Foundation is an African-led organization that is on a mission to promote the access and availability of payments infrastructure in the continent of Africa through accelerating the scale of inclusive instant payment systems for all Africans, particularly the financially excluded. And this is because of our belief that IIPS can significantly enhance universal access to financial services for many adults across the continent by 2030. Our problem statement is very simple. It's that over 400 million adults on the continent are financially excluded, and digital payments cannot be limited to the 55% of Africans who are financially included, but must also be available to the 45% who currently are not. We all understand that one of the reasons as to why there's limited adoption of digital payments is because of limitations with the payments infrastructure. And that's why AfricaNenda is on a mission to unlock the untapped opportunities to drive financial inclusion by leveraging two pillars, as you can see on the screen. Firstly, by providing payment system pre-project design and planning technical assistance, proof of concepts. Sorry. Can you hear me?
We can hear you very well.
Yeah. Okay. Okay. Thank you. Yeah. Firstly, providing payment system pre-project design, planning, technical assistance, and proof of concepts that help create scalable, inclusive instant payments projects, as well as secondly, strengthening the capacity for the knowledge of inclusive instant payment systems in Africa's most influential institutions through partnering, of course, the DFS ecosystem actors. The foundation also supports policymakers in terms of drafting guidelines and also just championing advocacy and positioning around key themes that provide a favorable environment for the scale of these systems. Over to the next slide, please. I'll very quickly just attempt to revisit the state of things in terms of instant payment systems. It's a very huge report. I'd encourage every one of you to go and have a look at it. Next slide, please. But when it comes to instant payment systems, from this 2024 report, we see that We're experiencing significant growth in IPS in Africa. First of all, when it comes to the question of what is IPS and IIPS, I know throughout the presentation you'll be hearing IPS and IIPS. From what we have put together, IPS are that is, instant payment systems are designed to facilitate immediate transfers of funds between accounts within seconds, of course. And the primary goal is to offer that seamless and efficient funds transfer or remittances across individuals. When it comes to the additional I, that is IIPS, we see that these are built on this rapid transfer capability, but most importantly, are specifically tailored to promote financial inclusion. When we look at the growth in IPS, and we'll come to that IIPS discussion later, between 2023 and 2024, this landscape is evolving to include 28 domestic instant payment systems. And we also see that among these 7 countries have multiple live IPSs, with Ghana being the only country where the domestic schemes are interoperable with one another. There's also some notable progress when it comes to inter-scheme interoperability. We see several initiatives across countries. Some of these countries are still figuring out how to make the duplicate systems interoperable. In some of them we see regulators championing the support required, for instance, through calling for interoperability mandates and amended regulations. Over to the next slide, please. From a regional perspective, we have GMAC covering 6 CEMAC region countries. In addition to GMAC, that is the live instant payment systems, we have PAPS as well as TCIB. From an IPS in development perspective, we see that we are anticipating 4 systems will go live. This is the COMESA, the East African Community, and the ECOWAS, which is also set to be interconnected with the YMO system. Over to the next slide, please. Now, with appreciating this growth, we still see that banks and MMOs, that is mobile money operators, remain the most common direct participants within the instant payment systems. So basically, all instant payment systems in Africa fall into these 4 types. So we have the bank, mobile money, cross-domain, and sovereign currency IPS. Of course, based on the interoperability arrangements, and which in part defines which PSP, that is which payment service provider plays or is allowed to participate. Over time, we see that the balance is shifting from bank-based instant payment systems to now cross-domain systems, the ones that deliver what we call all-to-all interoperability. And this means that the scope of participation is also changing. It's broadening. And here we see that with the rise of cross-domain payment systems, the participants, and especially the non-bank, non-MMO, and typically fintechs, still face hurdles when joining these payment systems as direct participants. Of all the instant payment systems, we only have 4 that have included all the different categories of players into the schemes. So essentially, what is happening in the different countries is that different regulators are using different approaches when it comes to licensing and regulating fintechs. Regulators may apply direct licensing, indirect licensing, for example, through partnerships and encouraging them to have sponsor organizations that facilitate that interconnectivity. So we're also seeing that due to challenges in licensing reforms that take time to take effect, we see that the fintechs are being left behind in terms of that direct participation. And currently, we only have 11 out of 31 systems that have fintechs that are not mobile network operator-led. Over to the next slide, please. We'll now delve into what we have found from the CIPS report in terms of opportunities for risk proportionate fintech licensing and passporting. Over to the next slide, please. First of all, the question here would be, what is the role of fintech entities? We've seen that the market is transitioning from just standalone bank IPSs or mobile money IPSs to now the cross-domain IPSs. But there's still an opportunity to enhance the participation of fintechs within these IPSs. And the question is, are they important? What are the fintechs delivering when it comes to these instant payment systems? Of course, as you can see, there's the delivery of more enhanced digital payments use cases, where fintech is expanding the use cases for digital financial services by supporting innovation across sectors, players, by leveraging emerging technologies. And also, more specifically, addressing the needs of households and businesses. And we can see this from different offerings, from enhancing health, financial health, improving the gig economy, providing rails for e-commerce, promoting cross-border, and so on. Fintech is also providing the necessary direction in implementing standards for infrastructure and security controls for instant payment systems. We see that with the technological advancement, they could further support the enhancement of the baseline architecture that is essential in delivering these instant payment systems. Full interoperability of retail payment systems is necessary to improve efficiency, and we see that there's a growing opportunity for fintech to standardize how payment systems connect and promote the enforcement of common technical standards, data architecture, and so forth. And then lastly, we also see that...
Just time check, we have 9 minutes left.
Yes, I'll try and keep to the 15 minutes, yes. Thank you. We see that also fintech is enabling reduced costs and facilitating economies of scale through enhanced connectivity and computing power. And leveraging the developments within the technological advancements, increasing data and information exchange is a way to tackle this. Over to the next slide, please. So what are some of the challenges faced by these fintechs? We see that many markets have innovation offices and fintech accelerators, but not all these institutions are equipped to support the fintechs throughout their license journeys. We appreciate that the fintechs face higher chances of falling out of the application processes, for instance, due to challenges. For instance, applying for the wrong license, sometimes applying for the license with incorrect functions, and so on. And the other challenge would be the manual, burdensome, and inconvenient processes, where sometimes this involves long waiting times, both in terms of making that application or even just waiting for the outcome of that application. We also have fintechs operating with new and alternative models, reporting that they face barriers in the application, not knowing, first of all, what license to go for, and secondly, who provides oversight, that is in terms of the regulators. And and talking of regulatory uncertainty, we see that they struggle to navigate complex regulatory regimes, which are often unclear, and sometimes lack that, what I may call regulatory interoperability, given these very fluid business models that they are pushing. Next slide, please. So what have we seen in terms of enabling risk-based or risk-proportionate fintech licensing and passporting? That is in the case of cross-border. So there are many merits, as you can see, in terms from strengthening the risk mitigation, streamlining the processes. But for the sake of time, it's interesting to just showcase the examples, what is happening in the different markets, what we are beginning to see in terms of regulatory reforms, appreciating the changes in the space to accommodate that proportionality in licensing, and also promoting the fintech passporting rights. We see that, for instance, in Ghana, there's the use of a segmented and tiered approach to fintech licensing involving different fintech licensing categories. And this is now applying in many or taking effect in many countries. And this also is just to ensure that there's the regulators or the different stakeholders are associating different risks to different activities and allocating proportionate resources to mitigating these challenges. Crossing over to Kenya, we see that the Central Bank of Kenya is preparing to bring all DFS digital financial services under the purview of the Central Bank of Kenya to overcome challenges associated with recognizing the evolving business models. And this just means that we're anticipating to have an all-encompassing approach to regulating digital financial services, whether it's to do with the conduct, supervision, licensing, and so on. In Rwanda, we have the NBR, the National Bank of Rwanda, revising the regulations to include tailored licenses and a streamlined process for modifying licenses. When it comes to enhancing the passporting rights of fintechs, we've seen other examples. For example, conversations between Egypt and Nigeria on creating fintech bridges. Or even from what we've seen recently, an announcement between Ghana and Rwanda, championing passporting of fintechs across borders between these two countries. So we're yet to see how this space is evolving. We are looking at other markets and leveraging the dialogue platforms and provided by associations and the regulators to keep this conversation going for the sake of opening up the space for fintechs. Next slide, please. So in conclusion, over to the next slide. To expand the reach of inclusive instant payment systems through risk proportionate fintech licensing and passporting, there are a few things that are very crucial at this juncture. And I'm happy today we have regulators in the room who are going to share some of the experiences in these examples from guiding the regulatory processes in the different countries, sharing the experiences, revising and expanding the license categories. You've heard of a few examples. We'll get to hear more from the panel discussion. Also, scenarios where there's deliberate consideration of financial inclusion as an integral part of sandboxes, and being critical and being up close and in terms of defining the eligibility criteria to provide preferential access to products or those business models that are championing financial inclusion. And then lastly, also to get to appreciate what is happening in terms of SupTech, where regulators are exploring supervisory technology to enable the streamlining and accelerating the license processing when it comes to opening up the space and just providing that open and level playing field. So I'd like to stop there. Happy to answer questions post the panel. So I'll hand it over to my colleague Sabine.
Wonderful. Thank you so much, Jacqueline, for the presentation. And it really is my honor to facilitate this discussion with the policy regulators that are on the panel discussion with me. If I can have them both come on camera, that would be great. Jacinta Anyinge is the manager of payment system regulation of Central Bank of Uganda. And Michael Eganza is the director of banking and payment services, Central Bank of Kenya. So really welcome to the discussion. What I will try to do is to be the echo of the fintechs and really bring forth some of the challenges, the voice, while at the same time, really looking at how you can help us understand what's happening in Kenya and what's happening in Uganda from a fintech licensing perspective. And hopefully we will have about 15 to 20 minutes with the participants for some questions. So before I start, let me give you one of the biggest complaints we've had during the report. Payment fintechs operating new or alternative business models say that they face barriers in the application and approval stages because the existing licensing category do not apply to that product and services. While this is sinking in, maybe I'll start with you, Jacinta, and see if you can perhaps share with us what are your approaches to fintech licensing in Uganda. Jacinta, to you.
Good afternoon, good evening. I hope you can hear me.
Yes.
Yeah, I'm sorry my video has had some challenges. I hope you'll forgive me for that. Maybe I can proceed with the audio. So Bank of Uganda has currently applied a principle of proportionality while licensing the various fintech applicants. Our law has enabled this, and what is basically happening is in the mobile money platforms, because that is where we see instant payments happening. So if one has an electronic wallet, the law has tiered the licensing requirements. So if an individual, you have an account, an e-wallet, the requirements for an individual, there is a maximum single transaction that an individual can do per day. Then there is also daily transfers and maximum daily balances. So that is what is currently with the individual account holders. So you'll find an individual account holder can hold up to a maximum per day of about $2,700 to $5,400. And then a single transaction that they can do is about $800 to $1,300. And then the maximum daily transaction an individual e-wallet holder can do is about $2,700 to $5,400 per day. Then we have the KYC requirements for the individual account holder. These individual account holders only require a national ID or a refugee ID. Then they will require a phone. They can use the USSD or feature phone. Then they have to have a registered mobile phone number. So that is the KYC requirement for an individual account holder. How about a small or medium enterprises? Their requirement is different. Their KYC is full. That is, they require a TIN number. They need the business licenses. They need a trading, VAT registration, and their terms and conditions for operating that account. So there is also a maximum amount of transaction that these medium and small business enterprises can hold in a day or can even transact. That is about $2,700 for a single transaction. And daily transfers can go as far as $13,000, and maximum daily balances that they can hold as a small and medium enterprise is $13,000. Then we have yes, please.
Because we have several questions and I want to ask questions, so I might come in and ask to wrap up so we're able to go through all of these questions.
Okay,
we really appreciated sharing with us from a consumer perspective and from an agent perspective how you have tiered the requirements. So if you want to close on this one before we move to the next question.
Okay, let me close on it. Then we have the super agents, the merchants. Those ones do not have any daily requirements because theirs is open, but they also go through full KYC. And then the minimum capital requirements and license fees. These ones are tied to transaction values and volumes. So the higher the transaction value, the higher the capital requirements. Thank you.
Wonderful. Thank you very much, Jacinta. Michael, can I come to you? Now I'm really looking at it from a fintech perspective. What is the licensing process in Kenya, and how are you looking at, this risk-based licensing framework?
Okay, I think, sorry, are you able to hear me?
I can hear you, absolutely.
Okay, fine. So sorry, I think I dropped off at one point, so I hope I didn't miss much. So I think, thank you. I think for us in Kenya, so two things. One, we recognize that licensing is not a one-size-fits-all. So what we've tried to do is employ what we call activity-based licensing, which we take into consideration that the risk attributed to the payment service an applicant wants to seek licensing for. And I can give certain examples in terms of how we approach this. So for example, fintechs that want to venture into what we categorize as high-risk activities like e-money issuers or e-wallet providers are subjected to much more stringent requirements. Why? Because then of the risk around holding money and the risk associated to that as per compared to, let's say, the applicants that are just payment system operators, where they just facilitate the technology that supports payments. Another example that we look at is that, so we also do recognize that some of our applicants, especially, are very small. So our licensing, for example, regime recognizes just registration. So if you're a small chama, a chama is, a small chama, I don't know how to explain what a chama is. and you want to be able to, let's say, provide payment services for a small niche of people in a certain rural area, maybe we don't need to subject you to a full licensing regime. What we tend to do is just register. And registering allows us to be able to, first of all, aware of what you're doing, but also just from a regulatory standpoint, be able to access some reporting requirements if need be. I'll give you another example is that, for example, financial institutions, either microfinance banks or banks, are not licensed. So what we do is that we only authorize them because the license in which they have recognizes that they can actually be able to do payment services. But more importantly, even in our distinction, what we try and do when we assess the licensing applications is to see whether we can not license, but really try and encourage a lot of partnerships. Because a lot of the fintechs that come for licensing, so we have in our desk over 500 applications, a lot of them, various sizes of fintechs, various propositions. Some of them are very similar, but some of them, because they're very small, we acknowledge that there's benefit if they can actually partner with a well-established fintech. So we encourage them to seek those kinds of partnerships. So looking at an array of this, so you realize that it's not a one-size-fits-all. It all depends on what service the applicant is seeking, what size of an applicant it is, and how then do we assess their risk. That then determines the licensing procedure that we apply for each applicant.
Wonderful. Thank you very much, Michael and Jacinta. Let me share with you another comments we got in terms of the challenges the fintechs are seeing in the ecosystem, particularly with regard to fintech license passporting. So what we've heard is that there is no regime for license passporting. So there are no regulatory harmonization from one jurisdiction to the other one. So which means that the fintechs have to repeat the same process of registering in any jurisdiction. And that inhibits expansion, that inhibits the choice in cross-border payment solutions. So with that as a background, I'd like to hear from you, Jacinta, if you can elaborate a bit on the regulatory framework in Uganda and how this can support innovative fintech solutions and what you think is needed. Jacinta?
Thank you so much. The regulatory framework in Uganda is for fintechs is the National Payment Systems Law, which was enacted in 2020, and that law provides the foundation for regulating and overseeing fintechs in the country. And then we have the regulatory sandbox framework, which allows these companies, the fintechs, to test their innovative products and services in a controlled environment with the regulatory oversight. So it fosters innovation while managing the potential risks that may arise. Then in Uganda also, especially the central bank, we have the financial innovation section within the payment systems department. And that department, their division is basically to provide a platform for fintech companies to engage with the central bank and discuss regulatory issues and receive guidance. So we've had a number of fintechs usually writing to us, and then we schedule meetings, or even sometimes we just write and give them guidance on the issues that they're seeking. We also have the data protection law, which protects and gives a framework for protecting personal data, which is crucial for building trust in the fintech services. So this is basically the regulatory framework that we have in place. We haven't yet joined the team of Ghana and Rwanda that is about to launch their passport processing. We hope to join that team very soon and be part of that MOU. Thank you.
Wonderful. That is great to hear. Michael, can you come in? I think earlier, Jacqueline in her presentation also mentioned that, a vision of having all the digital financial services under, the Central Bank of Kenya's purview, but maybe you can also give us a view of the regulatory framework in Kenya.
So I think the regulatory framework for Kenya, first of all, is anchored on the Central Bank Act that gives the Central Bank the mandate of licensing digital financial services. And this varies whether they are payment service providers or digital credit providers. So, and we have various regulations. So you have the Anchor Act, which is the Central Bank Act, and then we have the National Payment System Act, which goes further to kind of define the specific of how you go about licensing and the procedures of licensing. I think besides that, what also does inform what we prioritize when we're looking at licenses is our main policy document, which is our national payments strategy. So we usually run this on a cycle of, I think, it's 4 years. So 4-year cycle. So within that cycle, we try and appreciate what our priorities, what is it that we're trying to drive, and what kind of stakeholders do we need to be able to help us support in driving that agenda. So that becomes very, very key for us. So while those are the main regulatory frameworks that drive us, we also do recognize that there are shortcomings. So for example, our payments law has been around since 2011. Between 2011 to now, there's been a lot of changes in terms of business models, how payment service providers, solution for payment services because of the changes in technology and all that. And with those changes, then you have very new risks. So, for example, we see people wanting to come in to do open finance and open banking, but we have no provisions within the law to allow us to be able to assess how then do we license players or third-party providers that want to come into this particular space. Issues of virtual assets, very emerging issues, which have not yet been factored within the regulatory frameworks, so that, for example, when you have virtual asset providers who want to come and provide a virtual asset in the context of payments, how do you then provide that within an existing legal framework? So you find that those shortcomings do exist. And I think part of what we're trying to do is how do we address those shortcomings? So that's part of what we're working on. I think with regards to the passporting, so the way we look at it is that within the region, so it's an effort we've started. We don't have a passporting regime per se. But I think within the EAC, with the partner states within the East African community, we are seeking to develop what we call a mutual recognition framework. So not really, I wouldn't call it a passporting, but a mutual recognition framework, so that if I'm licensed in one jurisdiction within this particular common market of the East African community, do I get recognized? Or even if I'm to operate in a different jurisdictions, it has to be with minimal requirements. So it's quite an exercise because it's not just about the payments, but the other aspects that have to be considered. But it is something that we are embarking on. Hopefully, then it will make it easy for fintechs who want to operate in this space within the region.
Wonderful. Thank you very much. Allow me to share also for content of the other challenges we've seen. So, for instance, the fintechs are saying that after applying, they may not have any insight in the state of their application while it's processed. They receive no explanation. They're asked to resubmit additional information. There's no transparency on the reason behind a rejection or the timeline that it might take. Complaining about onerous, lengthy, costly processes, manual and inconvenient processes in the application process. So just bringing this forward as we're looking at some of the questions. Jacinta, I wanted to come to you and see what do you think there is the collaboration space there with industry players as we're looking at regulation and fintech entities being able to really expand and grow within the regulatory environment in Uganda. To you, Jacinta.
Thank you so much. First and foremost, I want to appreciate the fact that collaboration has enabled the central bank reach where it is right now. When we're coming up with the law, we realize that before you put up any law, you need to identify who are your stakeholders, who are the people who are going to be affected and whom you want this law to benefit. So we had to come up with the right stakeholders, and this is what has helped us stand till today. So for the fintechs, there's even an association whereby they meet together, and then we also have quarterly meetings, and then they are able to meet the regulator and raise their concerns. So stakeholder engagements has helped us also get expertise from the fintechs, because these are the forefronts of innovation. They are the ones developing the technologies and the business models. So they have a deep understanding of the technical aspects of their solutions, the potential benefits, and the associated risks. So when the regulators interact with them, the regulator is able to have a broad view of the financial system and are responsible for ensuring its stability and protecting consumers. So they bring in the expertise in risk management, compliance, and consumer protection. And as a result of this partnership, we are able to regulate a product, not in a stringent way because we've appreciated the risks, and then we apply the right law to enable compliance. It has also created also trust and confidence in the sector because there's open communication. So these stakeholder engagements enable communication between the regulators and the fintech companies, and that has fostered transparency and built trust in the regulatory process. So where there is uncertainty, they are able to write to us or raise an issue, and then we are able to address them. It has also helped keeping the pace with change, because the fintech space is constantly evolving with new technologies and business models emerging rapidly. So with the collaboration, the regulator is able to stay abreast of these changes and adapt their frameworks accordingly. So this is about agility, basically. We don't remain stuck to our old ways. We are able to adjust. And this has been buttressed by our sandbox framework, the law, which enables us to allow innovation. So we give it a chance to grow. We see how it operates, we monitor the risks, and based on that, then we apply the relevant law. Thank you.
Thank you very much, Jacinta. Michael, I want to come to you. One of the comments also we've heard in this research is the ongoing debate about blockchain and crypto assets, which has resulted sometimes in inconsistent or reversed policy. So this uncertainty for fintechs operating in that space has been challenging. So I'm curious to hear from you in terms of advancement in technology. What's the impact on the regulatory approach that you've taken, or Central Bank of Kenya has taken for fintech licensing?
I think just tied to what Jacinta talked about, I think it's the same approach. So what we are saying is that the advancement in technology and the technological change, especially that influences the business models and the various services that are offered by fintechs in this particular space, demands regulators to be quite agile in terms of how then they approach either the licensing or even the oversight of players that act in this particular space. So they need to be able to understand these technologies, to understand the business model, informs how then you approach it. And what we've realized is that as regulators, so we need to be able to spend more time, but also work with fintechs in terms of co-creations of regulations that affect them. So involve them in terms of how then do we co-create the regulations that can manage this particular space. That becomes more useful because then you're able to draw onto the experience, but also our experience in terms of that. That becomes extremely useful. I think the test and learn approach is also something that has been able to be used very well in Kenya, where you either through a sandbox environment or even just through working alongside with the fintechs to be able to see what exactly they want to do. Start small and then expand once you're able to appreciate what the risks are, and then support them through that particular journey. Because I think part of our mandates as regulators is also to support market development. So we do work very closely with the fintechs that are in this particular space to see their ideas to fruition, but also even from a licensing perspective, work with them through the journey to get them licensed. So sometimes it never always stands out. You never always see things from the same point of view, but occasionally, or many a times, you have points of convergence, and that allows you to be able to move forward.
Wonderful. This is going to be my last question to both of you, because I really want us to give opportunities for questions. So Jacinta, if I can ask you in terms of looking forward in the different emerging trends in the payment ecosystem, what are your thoughts in terms of the fintech landscape in Uganda and in Africa, and also how regulatory approaches will evolve for instant payment systems?
Thank you very much. From my view, from where I sit, I've seen there is a high demand and evolution in the cross-border payments. A number of people, as the world gets more interconnected, the demand for efficient and affordable cross-border payments is increasing. So we are seeing the trend growing. And that is where that passport licensing comes in very handy, because we need to be able to let participants in the African market, in the regional market, to be able to transfer money at a minimal cost and very efficiently. Then the other thing I see that is coming up is the AI and machine learning. People are using it right now for fraud detection, personalized financial advice, and automated customer service. So there is a growing trend in this area. So I think it is time that our regulatory framework adapts to the AIs and machine learning, and we put in place these laws that can govern this kind of transactions that support machine learning and artificial intelligence. Then there is also a demand for open banking to allow third-party fintech companies to access customer data from banks with consent through APIs. So when this is regulated, because right now we have no law, and yet the market is demanding. So we need to reach a point whereby we open up these sources such that the third-party providers, the fintechs, can tap into this information and avoid restricting it only to the CRBs. So there's need to open up this area. And of course, my colleague from Kenya had talked about digital, the virtual assets. Yes. The demand is high. And we need to reach a point as regulators whereby we can come out and pass a law, as opposed to saying we don't regulate. Whoever is engaging in it is doing it at their own risk. Thank you.
Wonderful. Thank you very much, Jacinta. Michael, forward-looking trends and how that would impact the regulatory environment for you.
I think a lot of the trends I think Jacinta has talked through. So I think for me, I will take the approach. So two things, rather than repeating myself, I think what she said, I fully agree with that. Those will be the trends based on what we are currently seeing, issues around open finance and open banking, issues to do with AI and the influence of AI in the business models is what we are currently seeing and preparing ourselves to that. But also from a regulatory perspective is that how then do we deploy technology to supervise and oversight the fintechs? It's something that it becomes an area of focus for us, because we realize that as we have more and more fintechs and as the business models become more complex, I think we can only be effective if we're able to deploy some technology, whether it's AI, some form of subtech, to be able to assist that from an oversight perspective. But I still think real-time payments will still be an area of focus. Going forward, the need for instant payments is going to be there. But even as we do that, from what I have observed at the central bank, you can't lose on the basics. A lot of these things, from what I've seen in my engagement with fintechs, the failures always are not about the fancy stuff, but around the basic things. Issues to do with governance are central. Issues to do with consumer protection are at the core of the stability of this particular phase and the trust. So if we don't get the basics right, then even the future and the fancy stuff can get off. So as we think about the fancy stuff, let's pay more attention to the foundational aspects, because then once we get those right, then we're likely to do better.
Thank you very much, Michael. Get the basics right. Then we can move to the complex and fancy stuff. Thank you. I think we are now part of the Q&A session. I know my colleagues have shared some of the questions that are online on the chat. So let me start maybe with the first ones, and as we go, we can see if we have more. Well, the first question is addressing sandboxes and innovation, alternative, and the question is about the introduction of simplified licensing could be an option, or also looking at temporary licensing as a way to provide options for new fintechs that are coming into the ecosystem. Any comments to that?
I think that I totally agree. I wouldn't call it simplified licensing. I think the right word is risk-based licensing. So you're able to look at the risks based on the service that is being provided, and then based on those risks, then maybe you can temper down the requirements based on that. So if you sometimes just need to register, you register. If you need to, so you don't subject everybody to the onerous licensing regime if they need to, but that then is informed by what risks do they portend in terms of a service, and then you can, as they develop and as they mature, then you can be able to allow them to start doing the more complex stuff. So walking with them through the journey would help.
Wonderful. Jacinta, there's a question about the security of platforms, cybersecurity, data protection among fintechs. Any perspective on this, please?
The security of the platforms and everything. Now that is basically cybersecurity issues. What is the cyber security frameworks that have been put in place? What is it that, how are the interests of the consumer protected? So all those are aspects that one has to look at: the consumer protection issues, the data protection issues. Has the information of the consumer been protected? We have scenarios whereby a consumer has put in their information. For example, they have borrowed money, and then we find these providers using that information for adverts, or even getting the information on the contacts of the customer, and then harassing the family members or relatives for purposes of payment of the outstanding loan. So what are the consumer protection aspects in place? And they should be implemented. Now, sometimes the challenges we have is, even when the consumer reports the issue, the regulated institution is not quick in handling it. So as a regulator, we should come in and always follow up the consumer complaints that have been put in place, and pursue the licensed institution to track all these complaints that have been registered with them and whether they have been closed. Through that, we will ensure safety, efficiency, and build trust in the sector. Thank you.
Oh, thank you very much. This is perfect landing, because Michael, I want to bring you into the conversation as part of the work that we are doing at AfricaNenda and looking at the inclusivity of instant payment system. We have found that consumer recourse is actually the most difficult component of the inclusivity spectrum. So I have here a question that says, fraud and scams are perpetrated through fintech platform and they are rising. What are the approaches to build more trust in that digital ecosystem and protect consumers? Any thoughts?
I think you're clearly right. I think from what we've observed, especially as digital financial services take root, I think the risk around consumer protection, especially fraud, and incidences of fraud have become so apparent, mainly depending on because of how fast money moves and things like that. And I think the challenges we observe in this particular process is that, yes, you may develop the systems that allows things to be efficient, but then how then do you protect the consumers? And you've talked about dispute resolution frameworks. Do we have those in place? And not only in place, but are they enforceable? So what I have observed is that sometimes they're in place. The issue is always the enforceability around ensuring that all the players are operating under the same kind of scheme structure. I think the card schemes have a very good way of doing this, but outside the card schemes, then you find that everything collapses, especially for instant payments and other forms of payments where there's really no proper governance around how some of these things are managed. So then I think what we are trying to do within the Kenyan environment, realizing this particular gap, is to say, how then can we first of all develop a consumer protection framework? And part of then the focus then will be around the issues around dispute resolution, and then can the regulator then play a very central role in ensuring there's enforcement. By virtue of our role and moral suasion and being kind of the owner of the scheme, if I may call it, can we try and force some kind of discipline and alignment, and whether that can actually be able to help is something we are working on. We haven't yet perfected it, We still think that there's room for improvement, but it is a significant concern because a lot of the complaints we get, whether it's fraud or errors in payments, and people are trying to ask for the money back, is all around the issues of there's no proper framework in place. So it's a challenge. I don't think we've managed to figure it out well, but I think with time we should be able to do something about it.
Absolutely. I think it's an ecosystem-wise challenge that we're seeing, and more collaboration between, of course, the regulators, but also consumer associations and the different stakeholders and enablers such as ourselves can help move that equation a bit forward. There is a question that came up again, touching the fintech license passporting, and are there some comments in saying perhaps there are some lessons to learn from the European Union journey on that passporting. So I don't know if any of you want to comment on that question, or what are some of those lessons that perhaps we can look into, given that it's a journey that has happened in other regions. And I think Michael, you started the conversation earlier on the
as I say, I think it's a much more complex. I mean, it's in such forums it's easy to talk about passporting, but the amount of legal hurdles that you have to be able to go through, even just because it's not only a central banking issue. So what we've seen in our attempt to try and even in our engagements with neighboring countries to see how can we develop such a framework, we've realized that we need to be able to bring on the table a lot of various stakeholders from various sectors beyond just the regulator. So, and the more people you bring on the table, the more complex the subject becomes. And you find that probably it's easier in the EU because then they operate within a common market. But when you have this fragmentation, especially, for example, in the African context where you don't have a common market and all the regulatory frameworks from one country to another differ, how then do you come to a common criteria that says, okay, fine, even as we are moving towards passporting, how then do we ensure that the possible risks that may come with that have been addressed, et cetera, but also how do we guard against because sometimes I've also observed nationalistic tendencies sometimes tend to creep in, or we think these guys are going to come and flood our fledgling fintech ecosystem. So we need to be able to protect our own fintech ecosystem to allow it to grow and mature to a certain level before we allow for competition. So, and then once you start getting into that debate, all the cookie crumbles. So as I say, sometimes it's easier to talk about it in policy papers, but when you now go down to the actualization, you realize it's quite a complex subject. But I like what Rwanda and Ghana have done. So through that kind of approach where you do it on a bilateral basis seems to work than trying to do it with many countries at a go. So you're able to resolve the issues faster and move forward. So I think that's how I think about it. But it's a complex subject because we've attempted it and we've gotten stuck. So I'm keen to learn from other countries that have done it. So
it's wonderful. I think we are all going to be looking forward to what's happening between Ghana and Rwanda on that space and see the lessons that we can learn in our own ecosystem. I just want to come back to something you mentioned earlier when we were talking about the consumer recourse and recognizing that the card system, given how long it's been in the market, might have some lessons for us to learn. So just want to say that AfricaNenda is actually diving into a research on consumer recourse, looking at globally the card network and lessons that we can learn, but as well as also looking at instant payment systems that we've mapped so far in Africa and beyond, and seeing what are some of those best practices on consumer recourse. So hopefully when we do share the findings, that might come in to all of the ecosystem players as well. I think we are nearing about closing the call. So as the last questions, and of course, give you also the opportunity to share any call to action that you would want to with the ecosystem on the line here. Just Jacinta, maybe I would like to come back to you. I think there was a question related to sandboxes and the innovation ecosystem and how to ensure that, you know, the transparency on applications of fintech applications and how people they are aware that the application was received, that's being processed, how long it's going to take, and that visibility component. How do you address it in Uganda?
Thank you so much. What the Central Bank of Uganda has done is there's an email address for the sandbox, which has been put up on the website. So anybody can send that email or get that email on our website, and then you write to us, and we are supposed to respond to you. So we usually respond within at least less than 7 working days. There should be a response. Then there are also requirements on the website on how much money you should pay, especially to apply to be in the sandbox. But before you reach that point of applying, there are minimum requirements that you must meet. First and foremost is your innovation should be genuine. Then there should be a benefit to the consumer, and there should be also safeguards as you're trying and testing your product. Then that product that you want to bring on the sandbox, it should be ready for testing, not something that is just beginning from the grassroots, very, very tender stage. No, it should have matured to some level that it can be tested, and it should be suitable enough to the extent that you should have an exit plan of, if it has been approved, how are you going to implement it in the market? So all that has to be taken into consideration. So the advantage we have is everything is on our website, so you can communicate with us, and then we can assess before we take in your documentation and say that you're fit to be in our sandbox. Thank
Wonderful.
you.
Any call to action for all of the participants that are here? I'm glad to say we've reached over 125 participants for this call. So the fintechs out there, what would be your call to action, Jacinta?
To the fintechs, first and foremost, I want to encourage them to continue bombarding us with their products, because that is the only way we shall know what is in the market. I mean, they are the innovators, and us, we come with the law thereafter. So they should continuously help us. We are in this market, and we all enjoy these products. When mobile money began, we were wondering how far is this going to take us? And mobile money has been so unique to Africa that the developed world do not even appreciate how the thing works. So let us continue innovating things which are customized for our ecosystem, for our population. And we are willing to walk the journey with you. Please ask us the questions. We are also willing to share with you and guide you, because you are the innovators, and us, we are just here to protect the interest of the customers. Please let us work together. We are available and we are approachable. Thank you.
That is wonderful, Jacinta. Thank you so much. Michael, back to you. Again, looking at, how does the transparency in the application process, how do fintechs know that it's, application is in and it will take so much time? How do they get this feedback and your call to action? I see some hands up. I would recommend you put your questions in the chat, and we'll try to address them within the time.
I mean, that's an area I would want to confess that requires some improvement from regulators and even from us here at CBK in terms of creating some transparency around the licensing process. So we are trying to and doing a lot of work in terms of starting an initiative on how we can automate that whole process so that we move away from the paper-based application to kind of digitize that process, and with the hope of also actually being able to create the visibility and transparency as to where the application process is. And I think that will be important in helping everybody understand this is the requirements, these are the expectations, these are the obligations you need to be able to meet, and this is where your status in terms of the application is. So we hope that by automating that process, we'll try and remove the lack of kind of visibility and transparency that exists. That's one. In terms of, I think, the call to action, from where I sit, a lot of these things, really it's about collaboration. So there's no one who knows it all. As regulators, we depend on the industry, but also they rely on us in terms of working together. So I think collaboration is key. So we only move forward if we are collaborating. So the need for us to be able, whether it's to co-create regulations or to co-create, is extremely important, because that's the only way then we'll know we are speaking from the same page. The issue of knowledge sharing is extremely important for all of us. As I said, nobody has a monopoly of knowledge. Maybe as regulators, sometimes we need to be capacitized, upskilled to be able to understand some of this new stuff, so that then we are almost speaking the same language. I think that's extremely important. And that also helps us to be able to build trust. And if once we build trust, I think nothing is impossible. So a lot of this is in the softer side.
This is amazing. First time I'm having a conversation with regulators, and I'm pumped up, I'm optimistic. I'm really looking forward to leveraging technology, more transparency, encouraging fintechs to reach out. I really appreciate the collaboration theme that came from both you, Michael and Jacinta. We can only do this together. It is an ecosystem, it's a global village. How do we move this forward? So I'd like to thank you very much for taking the time to speak with me, and allow me to pass it on to my colleague Nesrine to close this call. Nesrine, to you.
Thank you very much, Sabine. We want to sincerely thank all participants and all speakers on the call, and Jacqueline for the great presentation. I just want to close it with one saying, which is, knowledge is a garden. If it isn't cultivated, you can't harvest it. So let's make sure that we keep this endeavor as gardeners and as colleagues, and we are harvesting, then we will harvest what we are putting in the soil. Other than that, I invite you to consult the knowledge zone on the RKE website, and also consult the State of Inclusive Instant Payment Systems in Africa 2024. Stay tuned for the 2025 report, which will be published by the end of the year. We are already starting working on that report. And the recording, the presentation will be shared with you. And you will also have a bonus in the email, which is a particular publication that you will receive in your inbox. So stay tuned for that, and we really appreciate your presence here. We had over 100 participants who stayed in the call. Please let's keep the discussion flowing, and we look forward to see you in the upcoming joint webinars with each other. There is a poll right now on that just pop up, so please answer that poll, and we stay at your disposal for any further questions. Thank you very much, everyone. And a huge shout out to the CCAF team for their amazing collaboration on this webinar.
Absolutely. Thank you, everybody.
Thank you very much, everyone. Thank you very much, AfricaNenda, for leading us on a fantastic session, and we look forward to the next one. Have a very good day, everyone. All the best.
Thank you.